Joining me now to break down everything moving the markets is Eric Criscuolo. He is the market strategist at NYSE. Eric, welcome.
Always great to be here. Thank you and good morning.
Good morning. So what are you going to be following most closely when the markets open in about 30 minutes?
Yeah, so it was kind of an interesting week last week. That the SaaS apocalypse is still kind of rolling through markets, where every time there's a new AI function, it's hitting some other type of industry vertical. Software has been under heavy pressure, so we'll see if that continues. But just anytime a new model comes out and it hits, it doesn't even have to be like a software vertical. Last week we saw trucking names get hit because of some of the improvements in some AI functionality. So just watching that in general. You hit on some of it as well coming in the latter part of the week. The PCE data, the GDP data, that big macro event. Those big macro events are going to happen later in the week.
All right, and what impact regarding that economic data do you think it's going to have on the markets, if any?
Yeah, so we've seen yields kind of trend lower. The 2-year yield is down, kind of below 1-year lows or around 1-year lows right now. The 30-year, the 10-year, those are all coming in as well. So there's going to be a new Fed regime coming in that has on the front of things has said basically Warsh, assuming he gets the nomination or he gets approved, will be based on what he has said that he wanted to lower the balance sheet of the Fed and also cut short-term rates. These were prior statements, right? We'll see how that jives with what he actually does when he gets in there. But you want to see the economy holding up in order to do some of these policies that he wants to do, assuming that we continue in a low hire, low fire narrative for the labor market, assuming that GDP growth holds up, that kind of gives him some leeway as to where he takes things. But again, he has to wrangle, 12 other members of the FOMC to do what he's hoping to do. So it's going to be interesting.
All right, and the S&P 500 is coming off of 2 straight losing weeks. What do you think has investors concerned?
Yeah, well, we mentioned that whole SaaS apocalypse, just the AI narrative where AI models come in and they displace everything that has come before it. So that's why you see all the pressure in the software names. And again, that's migrating out of software into other industry verticals. I mentioned trucking, last week, but also that's hitting, private credit markets. So all these PE firms that are in private credit giving out loans to software companies, right? Those loans are now coming under greater scrutiny. Can the software companies repay them if people aren't buying the software anymore because of AI? You can now just, code up your own, Salesforce, equivalent, even if you don't know how, using AI. So that whole scare narrative is kind of something that is really taking the market recently.
All right, and we saw Friday's CPI numbers come in softer than expected. We didn't see a market rally. How did investors view that report? I think investors are kind of the data is kind of in line-ish, so we're not seeing significant moves, up or down. There's still some kind of questioning about how robust the data is. A lot of the response rates for some of the surveys have come in really low, or have been trending lower for years now. So, there are some questions about the robustness of the data, especially still coming off of the shutdown. We're kind of normalizing there. So, I think, it's basically the totality of data. I don't think one data piece is going to make or break the market, although PCE and the monthly jobs reports are really big pieces that investors typically look at, but it's just this totality of data. If everything is kind of trending along the same lines, that's kind of what investors want to see. And as long as everything isn't breaking down at once or everything isn't getting hot at once, to really change the narrative, that's really what I'm looking at. And that's right. You mentioned the PCE data, which comes out on Friday. How do you think investors will react to that? We're about a month away from the next Fed decision.
Yeah, so the market has priced in about 2 more Fed cuts for the year. And so, you're going to want to see kind of the inflation probably, maybe in the same range. It could tick down a little bit. If it shoots up, that's going to be a problem because you really can't be cutting rates if inflation is blowing out to the upside again. So as long as the PCE is kind of stable, trending a little lower, that's going to give the Fed the room optically to cut rates and probably continue that narrative or the pricing of the 2-ish price cuts for the rest of the year.
Right, and we've seen a majority of S&P 500 companies reported or have reported earnings thus far. NVIDIA still due to report, a lot of retail giants still due to report. What are the major themes or trends that you're seeing in earnings season so far?
Yeah, earnings again has been pretty. The numbers on the, at least when you look at where consensus was and the growth rates, they're holding up well. So the expectations though have gotten really high, especially for some of the tech names. So what you're seeing is a lot of companies that beat the numbers. If their guidance isn't insanely robust, the stocks sell off right away. And then maybe there's some catch up in the end. But the immediate reaction is that you really have to clear a very high hurdle rate in order for your stock to move higher after your earnings if your stock has already been doing well. So that's kind of an interesting narrative. Maybe things get reset a little lower as far as expectations go if the market trades sideways or pulls in a little bit. But the earnings have held up relatively well across the industries. So that's just a good sign for just economic growth in general.
And what sectors are you seeing investors position themselves toward?
Yeah, it's interesting because for the past couple of years, it's been tech, right? It's been tech, and then the AI trade. This year to date, the top 20 names, almost all of them are down year to date. The largest of the large caps, right? So the top 20 biggest stocks, they're almost all down year to date. But what you're seeing now is a rotation from those names into areas like materials, into areas like industrial companies. Even last week, utilities had a big rally. Consumer staples has had a really big rally. So it's a little weird to see materials and industrials, a little bit of an energy and utilities and staples all kind of rallying at the same time. There's kind of, some are defensive, some are cyclical. They usually don't tend to move up all at the same time while tech is kind of breaking down, but that's what's happening. So there's a lot of movement underneath the surface.
All right, Eric Criscuolo, market strategist at the New York Stock Exchange. Thank you for joining us.
Always a pleasure. Thank you.